This is Brad Berry, Chief Investment Officer and Portfolio Manager with Dynamic Wealth Group. Welcome to this market and economic update. The stock market rally has hit a snag as investors debate the timing of the Fed's first rate cut this cycle. At the same time, many asset classes have performed well this year, capturing the attention of investors. This includes gold, Bitcoin, and large tech stocks. In the next few minutes, we'll explore how investors should think about these asset classes as a component of a larger portfolio. As always, it's important not to lose sight of the big picture, which we'll discuss. First, gold has reached a new all-time high, around $2,185 per ounce, based on the price of the futures contract. Prices of any investment like gold or stocks can be impacted by many things. Gold has rallied sharply, possibly as investors anticipate that the Fed will cut rates later this year. You see, rate cuts can be good for the prices of gold and other commodities because lower interest rates on bonds and cash make hard assets more attractive as a store of value. While gold has rallied significantly since the bottom in 2022, the S&P 500 has actually performed better over that period. More importantly, though, this chart helps to illustrate non-correlation, showing that there are times when both stocks and gold can increase. But there are also periods when they move in the opposite directions. Including non-correlated asset classes and strategies should be the goal of every diversified portfolio. Now, despite stocks' longer-term performance, this is not to say they are always better, but that all asset classes can play a role in a well-balanced portfolio. This has been the case despite investors' worries over fiscal and monetary discipline, geopolitical concerns, and more. Similar to gold, Bitcoin has also made significant gains this year. This is also partly due to possible Fed rate cuts, which increase investor interest in assets that can be a store of value. Bitcoin has also benefited from two other factors. The approval of spot Bitcoin ETFs in January has led to significant flows into these funds. Additionally, there is something known as Bitcoin halving, which occurs once every 4 years. That might reduce the amount of new Bitcoin mined in the future. Whatever the reason, it's clear from this chart that Bitcoin and other cryptocurrencies are extremely volatile. So like gold, the question is not just whether to invest in an asset class, but how it relates to the rest of a portfolio, what the investor's goals, time frame, and most certainly risk tolerance are. While digital assets are still new, it's clear that they are volatile and, unlike gold, have had a high correlation with other risk assets, including stocks. So what matters is balancing these assets in order to achieve an attractive risk-reward relationship that fits an investor's financial goal. The same is true for the stock market as well. While attention has been on large-cap technology stocks over the past year, this chart shows that many other sectors have also performed well. This includes financials, healthcare, and industrial stocks. The strong economy and falling inflation have led to a positive environment for many companies, not just those related to technology and artificial intelligence. Thus, it's important to stay diversified across asset classes and sectors, no matter how tempting it is to focus just on what has performed well in recent months. Just like driving a car, one should spend most of their time looking forward and not in the rearview mirror. Just because something has performed well in the past does not mean it will continue to do so. As I have said many times in the past, it's the bus you do not see that hits you. So predicting the future is not the answer. At Dynamic Wealth Group, we work with financial advisors to help them build and maintain properly diversified portfolios of non-correlated asset classes, strategies, and approaches that can help to provide a smoother investing experience. We hope you found these insights valuable. If you are a financial advisor and would like more information on our multidimensional approach, please visit our website at dynamicwg.com or reach out to us directly by emailing us at info at dynamicwg.com. If you are an individual investor, we are happy to address any questions you may have and put you in touch with a qualified advisor if so desired. If you are watching this on our YouTube channel, thank you, and be sure to like and subscribe. Until next time, take care, everyone, and make smart financial decisions.